Well, we also had a separate, they all should be out for capital, never went to anything now. So was he.
Hi, Ron. We have you right here in the middle.
You to everyone, so
Just Mike and Steven and then
Yeah, right, it's
Mike is
mixed up.
going to introduce you to introduce Sickish.
Right, it has been all-
So, yeah, so when we get to item number 4, he'll then turn to you.
Right, yeah, that's the only place.
Try to get it all put together.
all right, awesome.
How are you? Nice to see you.
Got your Cubs tie on and everything.
Oh yeah, better. Hopefully everybody got at least make the playoffs.
Got everybody here.
If they finish second, the Brewers, that'd be okay.
Yes.
Oh, yeah, you can't be turning.
I used to be okay with fans of two dishes.
Oh, the Cardinals are bad news. They win it every other year.
It's your choice, yeah.
I don't know about all that.
Call the meeting of the Finance Advisory Committee to order. Clerk, call the roll.
Tarazinski,
Here.
Chrome, Neely,
Here.
Parker,
Here.
Conlon,
Here.
Parch,
Here.
Petal,
Here.
6 present.
We do have a quorum. Prior to moving forward with the agenda, I would like to have the agenda placed on the table for discussion. Can I have a motion to approve the agenda?
So move.
I'll
Second.
second.
Okay. The purpose of this is I want to move the public participation up to the beginning of the meeting. That's what we have been doing in the past. We won't cut anybody off at the end of the meeting, but we have tried to not make the public sit through the entire meeting in order to express their views. So I would ask that change be made.
So move.
Second.
I mean, if we got to change
All
the
right,
order.
so now we're voting on the approval of the change. All those in favor say aye.
Aye.
Opposed? Okay, voting on the agenda as amended. All those in favor say aye.
Aye.
Opposed? Okay. So at this point, I will ask for approval of the minutes. These have all been approved by the city council per state law, but we also have to approve the sets of the minutes. Unless there is objection, I believe we can do this with an omnibus motion. Is there a motion to approve the minutes?
Chair Petal, maybe just knowing how the mayor handles the council, if you could read the items on there, if you're going to take them in an omnibus for.
The approval of the minutes, this would be the approval of the joint meeting on October 27th, 2016 with the council. The joint meeting on November 3rd, 2016. The joint meeting on November 8th, 2016. The joint meeting on November 15th, 2016. And the minutes of our last meeting on May 2nd, 2017.
Thank you.
Do I have a motion to approve?
So move. Second.
Motion by Tarazinski, second by Conlon. Any discussion, any additions, changes? We still, though they have been approved by the city council per the city attorney's opinion, we do have the right to make changes to the minutes, which would then feed through to the city council. Are there any additions or corrections to the minutes? Yes, Tom?
Just a comment, after reviewing those a little bit, I thought they captured some of the discussion as I recall it. It's obviously a long time ago at this point, but it would be nice to have them sooner. That's one comment, but I thought they captured a lot of the discussion, the critical discussion elements, so I appreciate that.
Right. I think that what I would say is I would have hoped that we would have had the first 4 sets of minutes in May. I understand how those could not have been available prior to that, and that would be only reviewing maintenance. So I don't think the council got those until probably the end of November, the joint meeting.
Yeah, I don't know exactly when they got them. It's a good question.
They have to be approved within 30 days
Yeah, we
of the meeting, and that's where the state law comes in. And so I suspect that those were approved in November and early December. That's it. Other comments, other additions or corrections? Hearing none, all those in favor of approval of the set minutes, say aye.
Aye.
Opposed? All right. At this point, we'll go to, I should have been precise, we're moving the public participation to item number 4. The public participation, we have had 2 requests to speak, and we will honor those, and if there's anyone else who wishes to address the committee, we will also honor that. The first to submit was Bessie Chronopoulos. I think we better at least use the microphone, please. Thank you.
Won't take long at all. First of all, thank you for doing this, for taking your time. The citizens very much appreciate your time and talent being devoted to your city, and that's a good thing. That's a very good thing, and it's much appreciated. My hope is that you will scrutinize the budget in great detail. One of the things that I'm looking at for you to scrutinize is have some input on how the TIF dollars have been expended. That's a biggie. That's a top priority for many people, and I talked to a broad cross-section of people throughout the community. And the other thing is, I think that you need to meet more often, maybe a couple of times a month at the very least. You know, that big gap, you know, I was waiting and waiting and waiting for something to have happened the last couple, 3 months. You should be meeting, and as much on your own. You don't need the entire staff here. You guys and gals are more than capable of understanding finances. So we need your eagle eye and your scrutiny, and to kind of help us out. So thank you again for doing what you're doing. Okay, your turn.
Thank you. Our next speaker is Mark Charvat.
Let me just say first, I concur with what Bessie said as far as the number of meetings. I think it's very important that you folks meet more often and scrutinize every single line item. I don't care if it's paper clips, subscriptions, everything needs to be looked at, because some of these things aren't looked at and they add up to thousands of dollars, and taxpayers are paying for that. A couple things I want to bring to your attention. Number one, and I've had conversations with Mr. Peddle about this, and I've touched upon it with our mayor and members of the city council, is the fact that since the state has finally approved a budget, hooray, I was told that the library is going to get its financing and is slated to get its financing. I'm not sure when they're going to receive the financing, but those of you new on the committee and new to city council need to be aware that for the last 2 tax years, including the taxes you're currently paying and the taxes you paid last year, property taxes, we gave the library a loan. The citizens gave the library a loan for 2 years. And when we're looking at the budget, and I want to make sure this committee reminds the council and the library board that that money is supposed to come back to us. It was promised to be returned to the taxpayers. I don't want to see the library looking at that line item thinking, we got an extra $500,000 we can spend. So we're supposed to get a rebate for 2 years, plus our current tax year. It has to go down by $500,000 approximately. I'll let Mr. Peddle address that later on, but I want to make sure that is brought forth. Item number 2, you probably all, we just approved the minutes from past Finance Advisory Committee meetings and joint City Council Finance Advisory Committee meetings. I want to point out specifically October 27th, 2016. Some points brought out by our First Ward Alderman Dave Jacobson, who pointed out a whole bunch of cuts. I do remember our previous Mayor Ray saying, hey, if you have cuts in mind, bring them to our attention. And I hope all members of the Finance Advisory Committee read Mr. Jacobson's list of cuts. And I want to highlight some because I've heard absolutely no discussion about this. And what are we going on? 8 months since October? Some of which include, he suggests a 10% salary cut across the board for city employees with a 12% management cut. He says that, and I totally agree with all his statements here, he expressed that people do not feel adequately represented by people at the higher staff level. A freeze on pay increases. That was obviously ignored when we passed more management increases just recently. Reducing senior management staff by no less than 3 employees. We've gone the other way. Nobody's paying attention to any of this. Convert non-essential staff from full-time to part-time to volunteer in some cases. Cut non-essential budget expenses such as social services. Cutting cell phones and sponsorships. That's a big one. I look at the items on this budget and the number of dollars expended for cell phones. I don't know, but private industry, we have to buy our own cell phones for work uses. So we need to cut that stuff. That's ridiculous. Cut dues and subscriptions. Enough with that. Conferences, we got to cut that stuff out. Switch from digital services, switch to a digital services phone system, Mr. Jacobson suggested. Explore part-time service. Outsource lawn maintenance and other public work services such as bush trimming. Another wasted expenditure that I see every year in the budget, and I don't know why we pay for this, is in the winter, the citizens pay for the snow shoveling of downtown businesses. If you own your business, you should be responsible for shoveling the sidewalks in front of your own business. That's part of doing business. Big one here, and we've talked about it for years, and just recently it's been brought to our attention with the approval of the web portal on the station website, is the City Manager Spending Authority. It's currently at $20,000. Mr. Jacobson recommends reducing that spending to $10,000. I think personally it should be down to $5,000 without council approval. It's being misused, and these are not emergency expenditures. That's a big one, so I want the committee to look at the possibility of doing that. But please review Mr. Jacobson's comments that are in the meeting minutes from October 27th, 2016. There's a lot of great suggestions there, and he's a good person to listen to. Thank you.
Let me only provide information as the last time that I spoke with Mr. Shervat was about 2 weeks ago. I think we were in person. The library's levy is large enough that it can handle the entire rebate in 1 year right now. The library's most recent levy was in the range of $2.7 million, and that was up from 2015, which would have been the last year that they didn't have the extra 500. And in that year, it was approximately $2.2 million. So it had only gone up roughly by the amount of that extra 500,000. So everything else held constant, and assuming that they get their money in a timely basis, we're looking at approximately, as our check figure, approximately $1.2 million being their levy for this year. And that's just something that we should be aware of as we're looking at that. The 1.2 would be what the council and the library and the Finance Advisory Committee had agreed. So that's just a heads up, and that's kind of what we should be looking for. Okay, I'm going to now, for item 5, move it over to Mr. Wilkins, our interim finance director, to introduce Sikich, their representative, for an overview of the 2016.5, that was the 6-monther, comprehensive annual financial report.
Thank you. And you're right, 16.5, that was the last half of calendar year 2016. So just 6 months, so not going to compare a lot to a full year that you had previously. So, but we invited Brian Lefevre, who is a managing partner with Sikich, who oversaw the process here, which would have happened earlier part of this calendar year. And so now you're I know we had sent this out to you electronically, but we also have it to project, and so hopefully the technology will work. And so I'll turn it over to Brian.
Thanks, Jeff. Well, on behalf of Sikich, I'd like to thank the committee for inviting us this evening to present some comments on the report resulting from the audit of the city for the 6 months ended December 31st, 2016. The city has prepared a comprehensive annual financial report. A comprehensive annual financial report, otherwise known as a CAFR, consists of 3 sections: an introductory section, a financial section, and a statistical section. What's required by Illinois compiled statutes for an audit of the municipality is just the financial section. So what makes it that comprehensive document is the introductory and statistical section, which adds all of the additional information that allows it to be a valuable tool for looking at the operations of the city. The statistical section, which I won't cover in detail, has a lot of good trend information, 10-year schedules of fund balance trends, property tax rate trends, debt ratio trends, etc. So I'd encourage you to take a look at that as well. Within the introductory section, looks like we have your memo.
Yep.
But it doesn't look like we have the document itself.
The document is further, it seems like the clicker is a little slow. Yeah, that's what.
Okay, here we go. Good.
Is there a receiver for the, does anyone know the receiver?
He's switching it out. I think it's the batteries.
Okay.
Okay, thank you.
There we go.
All right, we're moving along now. So within the introductory section is the award that the city received for its CAFR for its fiscal year ended June 30th, 2016. This was from the Government Finance Officers Association, the Certificate of Achievement for Excellence in Financial Reporting. This is the highest level of financial reporting within the local government industry, and it's 23 consecutive years that the city's received this award. In the financial section, the first document in the financial section is the independent audit report, which you see on Sikich letterhead. This is where we've given opinion on the financial statements. In order for us to give an opinion on the financial statements, we're required to follow 2 sets of standards. The auditing standards issued by the AICPA, which tells us the types of procedures that we need to perform when we're conducting our audit. And then the financial reporting standards, which are issued by GASB, the Governmental Accounting Standards Board, and GASB says what this document itself needs to look like. Once we follow those 2 sets of standards, we can then give an opinion on the financial statements. We present an unmodified opinion, and what that means is that the financial statements are presented fairly in accordance with generally accepted accounting principles, free of material misstatement. And this is the highest level of opinion that the city can receive on its financial statements. You'll note in halfway down the page, or more importantly on the 3rd page, there's a reference to government auditing standards. That reference is relates to the separate single audit or compliance audit that was done as part of the audit of the city. Anytime that the city expends more than $750,000 in federal funds, it's subject to the federal single audit, which is a separate compliance audit. That document will show you that we issued an unmodified opinion on the city's compliance with laws and regulations that could have a material impact on the financial statements. And we also are required to test certain of the programs, those federal programs. And this year, the program that was tested was the Mass Transit Grant, and we had an unmodified opinion on compliance with that major program as well.
Excuse me for just a second.
Sure.
For the benefit of the general public, I mean, I do know this, but for the benefit of the general public, can you explain what the purpose of a single audit is and why it's called a single audit?
So the single audit is all of the federal agencies that provide grants to local governments and not-for-profit agencies rely on one system throughout the country that all of those agencies, whether they be local governments or not-for-profits, that receive those federal dollars, anytime that's above $750,000 in expenditures, it's the federal government then that tells us what types of procedures that we need to perform when we're conducting those audits. So those are compliance audits, and those compliance audits are to make sure that those expenditures of those federal dollars are used in accordance with the program, the federal program guidelines that were laid out for those grants to begin with.
And the reason that it's a single audit is because you only do one rather than program by program, rather than the transportation
Correct.
department, the labor department. You come in and following the rules that you've talked about, there's only one audit, even though there are multiple programs that add
Correct.
up typically to that $750,000.
That's correct. You still have, at the state level, you'll occasionally have some state grants that require grant specific, but you're right, at the federal level is that one combined single audit. Very good point. In addition, there's also a separately issued compliance report related to the city's tax increment financing districts, and we also issued unmodified opinions for both the TIFs as well. Just past the independent auditor's report is a document called the Management's Discussion and Analysis. This is the executive summary of the financial statements. It's prepared by the city. We review it to make sure that it's consistent with the financial statements themselves and the requirements that GASB lays out for the preparation of the management discussion and analysis. It does a good job of explaining the layout of the financial statements, and it also explains some of the whys of the financial statements as well. The first audited financial statement follows the management discussion and analysis. This document is called the Statement of Net Position. The Statement of Net Position I like to refer to as a global view document. It takes all of the funds of the city and consolidates them into governmental activities and business type activities. A business type activity would be the water fund operation. It also then adds on the capital assets and the long-term liabilities all under one statement. Only for a couple years did those long-term liabilities include the net pension liabilities for your participation in the city's participation in IMRF, police, and fire pension funds. Therefore, those items are included now in the liability section on this global view statement as a full accrual financial statement. This therefore then makes, when you put that liability on the financial statement, it puts the equity or net position into a negative balance. The other global view financial statement is the statement of activities. It crosses 2 pages, and this is intended to show you a change in net position. Both net position for governmental and business type activities both went down slightly. That tells you that economically you're a little worse off at the end of the of the 6 months than you were at the beginning. Now, this takes into consideration depreciation on capital assets are flowed through as expenses. Those changes in those net pension liabilities flow through this statement as well. So both of these global statements are not necessarily used for a lot of financial analysis. However, it is in the GASB standards and therefore required that these statements be presented and audited in order to receive that unmodified opinion. What might be more helpful to most users of the financial statements are to look at the fund financial statements, first starting with the governmental funds, and the balance sheet for governmental funds is presented on pages 7 and 8. Funds that are considered to be major funds, according to the GASB calculations, are presented in their own separate column, and then the smaller funds are called non-major funds, and those are presented separately after the notes to the financial statements. So all of the budget versus actual comparisons are all in that combining an individual fund section. On page 10, then, is the same presentation for governmental funds of the operating statement, which shows revenues, expenditures, and changes in fund balances for the 6-month period. The general fund had, if we focus just on your main operating fund, the general fund had $19,741,000 in revenues for the 6-month period, with expenditures of $19,715,000. Overall, after transfers required to cover certain debt service payments, a decrease in fund balance of $255,000, which was actually $200,000 better than what was anticipated in the budget. Ended the year with a fund balance of $9,229,000, which represented about 41% of the expenditures.
Just a question?
Yes.
Is this a good spot for a question? Talking about unassigned general fund balances, could we talk about that from page 7 out of that CAFR?
Sure. So I believe the city's fund balance policy is, God bless you, is 25% of the annual budgeted expenditures.
Right. So if I look at the 630 balance in unassigned and I compare that to the 1231 balance, I see a decline in the general fund balance in the 6-month period of unassigned of $748,000. That sound right?
I'd have to pull out last year's report.
Okay. So, so when we talk about this in terms of one of the key objectives from council and the Finance Advisory Committee is really to monitor pretty closely that general fund balance. And as I compare that to what was budgeted to occur in the 16.5 budget for the unassigned balance, we budgeted to be at a balance of $8,620,000. We ended up at $8,375,000, or lower by $245,000 from our budgeted objective. So I just think from a council perspective and from the general public, it's worth noting those changes in what occurred in the 16.5.
I am cautious about making that comparison because we have yet to do a half-year budget before, and revenues and expenditures flow in different types of ways.
Sure.
It should be noted, but it may or may not be an issue when you work through the entire fiscal year.
Yeah, it may or may not,
Right.
but from a trend perspective and the fact that we missed the
Right.
budget that we just established is also worth noting.
But okay. Now, I want to make sure that I remember this correctly. The combined statements, okay, which would have been the statement of net position and I forgot.
Statement of activities, yes.
Right, okay. Those are based on the accrual method of accounting.
Correct.
When you start doing the funds, some of those are accrual and some of those are modified accrual. Is that
Right, so the
correct?
governmental funds that we're looking at here are modified accrual.
Right.
Because we don't have capital assets and long-term liabilities on those statements.
Correct. And so you could see some variance between the combined statements and when you move to the funds.
Correct.
Okay.
Correct. Staff know what the general fund budget is for calendar year 2017 for the general fund, off the top of your head? Because that's really the relevant comparison of the unassigned fund balance to, it's hard to compare that to a 6-month budget. It's really, it's more relevant to compare that to what the New Year's budget is, to know what your reserves were that you were starting with at the beginning of the year from a percentage standpoint.
Right. I think at this particular point in time, not to cut off discussion, but I think Mr. Tarazinski's point is well taken, that it should be noted that this appeared in the 6-month budget. It should be noted that we did not budget properly, whether that was because of just not being used to doing the 6-month budget, or whether that was due to some kind of economic or financial conditions, or whether that was due to simply exceeding the budget. We don't necessarily know at this particular point in time, but we should find out. We should take a look, again, in June, which would have been the end of a normal, or I'm sorry, a historical fiscal year, and then see where we're at. But
Page 15 of the report shows the operating statement for your proprietary funds. Those are those funds that rolled up into business type activities, and these proprietary or enterprise funds are always reported on an accrual basis. So you have your water fund and your airport fund, and then your refuse fund. The net position of the water fund and airport fund went down by $69,000 and $269,000 respectively, and the refuse fund broke even with an increase of $39,000. The operating statement for the pension trust funds then, which includes the police and fire pension funds. These funds are not included on the statement of net position as fiduciary funds. The pension trust funds just have their own separate statements, both a balance sheet, if you will, and then their operating statement. The changes in fiduciary net position is found on page 19. There's also additional information in the back of the CAFR that shows the breakdown between police and fire for the fiscal year. So for the 6-month period, there were city contributions in the form of the tax levy of just over $4.5 million, active member contributions of $632,000, so new money into the plans of just over $5.2 million. The net investment income for the combined plans was $2.9 million. Deductions or expenses of $3 million, so you had an increase of $5.1 million. So that the pension started out the year at 52.1 and ended the 6 months at 57.2 million. And we'll show more information about the actuary information on the pension plans in just a moment. One observation about the pension funds is, in order for the pension funds to grow, which they need to do to be able to pay the liabilities coming due when individuals retire from the plan, is oftentimes looked at structurally. A structurally balanced plan is one where the new monies coming in are more than the expenses going out, so therefore the investment income would all go to the bottom line, and that's currently the structure of both the police and fire pension funds here at the city. So that's something worthwhile to note.
It should also, I think, and staff correct me if I'm wrong, but fiscal year 16.5 would have shown 100% of a year's contribution to the pension plans, because all the revenue came in during the fiscal year.
That's correct. Very good point. Yes.
And even though it was a 6-month, even though it was a 6-month fiscal year, you got 100% of a year's worth of revenue because of all of its, well, that which was property taxes you would have gotten.
Correct. The notes to the financial statements have a lot of information about the financial policies of the city and a lot of details related to like the long-term obligations of the city. In the section that is the required supplementary information is where there's more information related to the pension plans of the city. So the first schedule on page 87 is the schedule of employer contributions for the Illinois Municipal Retirement Fund. So the way Illinois Municipal Retirement Fund works is that the actuary for IMRF determines on an individual local government basis what the employer contribution rate will be for each calendar year. And then that's based on, that's a percentage. And then based on your payroll for each month, you pay that percentage to IMRF plus the amount that came out of employees' checks of 4.5%. So each and every month, you're making a required contribution into the plan. So therefore, the amount that you put into the plan is always the same as what the actuary required contribution, because that's statutorily how IMRF was set up. So the it's about a $1.2 million amount. It's been anywhere from 1.2 to 1.1 million over the last couple of years is what the city's expense, if you will, was for the period of time. The police and fire pension funds are different in that there's an independent actuary engaged to perform calculations, and then a dollar amount is recommended, and then the city considers that as part of its overall budget process. For the police pension plan and the fire pension plan, the city has put in a little bit less than what the actuary recommended until this last 6-month period, where the city put in much more than what the actuary recommended. And that's what you'll see on pages 88 and 89. Then there's a series of, so that tells you, is the city putting in what the actuary recommended? That's one piece of the of looking at the health of the pension plan. The other piece then is to look at, when you draw a line in the sand and say fiscal year end is now December 31st, what were our liabilities at December 31st and what were our assets? And the assets are all at market value. So if you hit the market at a high point, that's going to be reflected as well based on those market values. So the IMRF plan was 83.2% funded at December 31st, 2016. The police pension plan was at 47.9% funded. Important to note that in the actuary's analysis for both police and fire pension, that a significant increase in the liability for both police and fire was due to new mortality rate tables used. So that caused a $2.6 million, or just about a $2.7 million increase in both the police and fire pension liabilities, just because those tables are saying that individuals are living longer. So that has obviously an impact on that overall funded ratio. So the police pension, as I mentioned, was 47.9% funded, and the fire was 39.1% funded. There's then a series of schedules that show the what the investment returns have been for the last several years for both police and fire pension as well. For the 6-month period, the police pension had a 5.12% return, and the fire pension had a 5.93% return. Those were the comments I had prepared for you on the comprehensive annual financial report this evening, but I would be happy to answer any other questions that you might have.
I got a couple, and I don't want to take too much time. Just from a standpoint of fraud, can you comment on that? There's recently been an incident in the community where there seemed to be inadequate controls in a public entity. Can you talk about fraud and testing?
So as part of the audit, we're required to gain an understanding of the internal controls of any government that we audit. And then as part of that process, we go through a risk assessment process to determine the areas of highest risk within any organization that we audit, obviously including the city. And then we then perform procedures based on those risk assessments. There's separate documents then issued related to if there's anything that comes to our attention where there's deficiencies in controls.
Okay, just to follow up on that, statistical testing, is that still part of the method of actual transactions?
It's a sampling of transactions throughout the year, that's correct.
Thank you. Just one other question. In the notes to the financial statements, there's what I would have called intercompany, but interfund transfers in support of various entities, including the airport, which now has a loan of about $478,000. I think that's coming out of the general fund in support of that. Does that show up anywhere on the airport's report?
Yes, so on the airport's balance sheet,
Right.
there's a liability advances from other funds of $478,000 that's owed to the general fund.
That may be just another item in the future discussion. I know the council in the past took great pains to pay off the debt from the airport, knowing it was unpayable, and that may be just a consideration of a policy issue and clearing it up at some point, because it can grow. I think it was $1.3 million way back when, and there was no basis for it to be repaid, and I'm not sure there is now either, but just for consideration in the future. It's growing again. Thank you.
You're welcome.
Any other members have any questions?
I do. You have given us a good factual information. Do you have any opinions or trends you see that we should, good or bad, that we should be more specifically looking at, or pension contributions, or?
So the city made a significant decision to put more dollars into the pension plans.
Mm-hmm.
We are seeing communities continue to have pensions as a high priority. That's something specifically that I would imagine that you'll be looking at in the bond rating report, is that a pension funding policy, in terms of like year in, year out, we have a policy, this is what we're going to do, is highly recommended. In addition, the working directly with the independent actuaries and with the pension boards, we've seen a lot of city councils that are meeting with those pension boards to jointly determine what the appropriate actuarial assumptions are that are being used for those actuary reports, because for example, the investment rate of return, if we make that return go lower in terms of what our assumptions are, then our liability goes up and our funding requirement goes up. Historically, in the past, it seemed like it was always well, what would my contribution be if the interest rate is X? We've gone away from that. We've gone to what should our interest rate assumption be? And that's going to need to be a continuing evaluation as we see what markets do, because thankfully your pension funds are large enough that you can at least invest up to 65% of the pension funds by those boards can be invested in equity securities. that's where the markets have been growing, right? Because our fixed incomes haven't been earning any, but we have 35% of those dollars are in securities that just by the markets are not going to earn much return. So those have been kind of the hot topics with a lot of communities, and monitoring those things and regularly having a dialogue with that independent actuary about, so what are these mortality tables telling us? What, you know, what does the actuary's crystal ball say? Are we going to keep having these large hits to our liability because of these tables? And I know they don't know until they know, but oftentimes you can get some feedback in those areas as well. So I would encourage you to use that independent actuary as a professional service provider to the city to get some of that information as well.
Just a reminder to the committee and going back to staff and for those who are new information. We had a change in actuaries, if I'm recalling correctly, and when the actuaries met with us, they did say that they intend to decrease the rate of return that is assumed. They didn't put it all in at once because they weren't completely done with their analysis, but we can expect that the next actuarial report on the pension plans that we have local control, in quotes, of the police and fire, that liability will be affected by in all likelihood, a reduction in the assumption of the rate of return on the investments in the pension.
And I would just add that our plan is to bring the actuaries to next month's Finance Advisory Committee meeting so that you can address the assumptions and any questions that you have in regards to their recommendation.
Excellent. Because right now, I think they were up around 7.5 is what they were assuming.
You are correct, yes. 7.5 is what's in the... Right,
yeah, 7.46 or something like that. And that will come down. Right now, State University Retirement System's using 6.5, so we'll see how that goes. But you can expect that will be taken care of, and the actuaries, when they met with us the last time, they were certainly on top of both of those assumptions with respect to three: the methodology that's used, the mortality tables, and the assumptions with respect to the rate of return that's assumed on the investments. Other questions? Okay, we thank you for your time.
You're welcome. Thank you very much.
At this point, let me just make a couple of comments that are related to the CAFR that will also bring us up to speed as we prepare for the next meeting. In the statistical section of the CAFR, as well as in the background that we're going to talk about with respect to revenues in the latter part of the meeting, there's a lot of information that the committee has talked about asking for in what would be a 5-year strategic financial plan. One of the things that's important in my discussions with staff, we realized that there were indeed a lot of things out there in terms of the template that the committee saw in May with respect to the 5-year plan. A lot of those things are already being done, and they are available if you go and you look in individual reports. And so in some cases, the 5-year strategic financial plan will be putting all of that information into one place, even though in some cases it's repetitive of things that if you really wanted to dig through the open records portal, you could probably find quite a bit of it. Or it may be a matter of putting more years together than you might see in a single report. So, you know, I think it's important to recognize, and staff will be bringing a first stab at the 5-year plan, which is what we agreed to in May, for our September meeting. And that will give us, in one place, some place that citizens and the committee and the council can look for that information. With that, let's move on to the next item, which would be an overview of the city's bond rating summary report.
Let me grab the remote real quick. This is a report that was provided by William Blair, who's been the underwriter, financial advisor for the city for a while. I'm not sure if I believe they probably have their meeting with the schools.
It's probably public, I would
All right.
share it.
One unique situation is that William Blair, as a firm, has decided to pull out of the municipal finance field. So you know, they still doing financials, but they won't be doing municipal bond work and such. So and I believe that was the beginning of this month is the last day that the staff that we had worked with there, you know, it was their last day. I think it was August 9th. So so we'll be looking for a new financial advisor at you know, as the city needs to issue bonds and refinance bonds. What as you know, though, the bond rating of the cities was downgraded. It was from AA3 to A1. You know, this is significant as far as the rating goes. This was due to some of the issues that we had talked about just now about the pension liabilities is one of the main reasons, and also the state reliance on the state doesn't help us any either. And even with a new budget, it still doesn't help being in Illinois, unfortunately. What could help our rating increase is the expansion of the tax base and diversification of the tax base. And Economic Development Department is working hard on that, and hopefully within the next 6 months or so have some nice announcements. And then of course, if we can moderate our pension liability. And that's going to be difficult given the demographics of the city staff. What can make it more difficult? Of course, deterioration of the tax base. You know, as we lose, as a building is vacant, oftentimes its assessment goes down. So it can go down by half just because it's vacant. So, and of course, that's can depend on the township assessor. That can go depending on each township assessor can use different methods sometimes. And then of course, if our so as our liabilities on pension will go up, that could deteriorate as well as our liquidity. So it's very important that we keep our fund balance policy as we had described before, and to fund the pensions, and so those two things are very important. On the next page, it's kind of hard to see on the screen, but that's why we gave you the handouts. Was basically a history of the bond rating, and for those that have been on the committee for a while, you may be familiar. But back in 2000, it was AA3, and the city held that rating until 2004, and then it was upgraded slightly, and surprisingly, after the economy started to decline, it was upgraded slightly to a AA2, but with a negative outlook. And that negative outlook and that rating held until 2015. And then it was downgraded to AA3 in 2016, and then again this year, just a few months ago, to A1. So it gives you some history. Next page, if you're not, just gives you the bond ratings. You know, the Standard & Poor's versus the Moody's. You know, whether it's AA with numbers or AAs with pluses or minuses and such, but it gives you an idea. And of course, the city of DeKalb now being at A1 or A plus under Standard & Poor's. If you were to correlate that to the, you can see obviously state of Illinois, city of Chicago, you know, and both of those really do weigh on the city. The next slide really goes back to Moody's calculation and of how they determine it. And they put a lot of weight. One on the rate of return. They were basically using a rate of return of 4.3%, which is dramatically low. As you know, that even our smaller pension funds with police and fire, you know, are in the upper fives and such. And of course, IMRF consistently is above 7.5. So, but they apply that ratio across the board. So if you look at that, the basically increases the liability from 178 million. 178, basically 178 million to 261 million. So so that's the dramatic increase. And the number that you'll see at the bottom, this 4.9 figure that they use, they basically say that any entity that has a AA rating should be in the 1 or 2 range. And if we were to if they were to use the original liability, we'd be about 2.43 instead of the 4.9. So we'd be closer to that range. But
I was confused on that, Jeff. Oh, never mind. It was reversed. Okay, go ahead.
Okay. You know, and when I had to actually ask William Blair about that a little bit myself, too. But the upshot is the main thing is the discount rate. You know, using that lower discount rate. And the next slide actually describes it a little bit more. And as you know, in the second bullet point on the next slide, our actuaries do use a different methodology, a more conservative age entry model now, and they'll be here next month to describe that a little bit more. But in their proposals, they are better than what the state mandate is. So we'll go into more detail next month on that. And then the very last slide, we asked if Standard & Poor's also does ratings, and you know, and if they were to run us through their calculator, where would we set? And if you look, you know, as far as economy, you know, the ratings that they use, estimator is economy is a little bit, you know, it's better than the middle. Management is strong. Budgetary flexibility is strong. Performance is in the middle of the range. That's due to you know, some negative deficits, you know, that over the last year. Liquidity though is strong. Debt and contingent liability. Reason that's so weak is that's pulling in the pension liability, so that's why it's way to the left. And then institutional framework. One aspect is a home rule that helps with that rating. So, but with that calculation, we'd be a AA negative with Standard & Poor's, which equates to a Moody's AA3. So it would put us back where we were. So. And again, it's not an official, but they run us, you know, they ran us through this calculation, and this is a calculation I've had other financial advisors run an entity that I've worked for through, and to give us a basic idea. So, so that was at least a little bit of a highlight that it's, you know, it could be better, but if we were to use a different bonding, if we were to use Standard & Poor's, the fact that we still have that you know, A1 with Moody's is still there. I mean, it's still public, so but it could moderate a little bit depending. But so we may have to again entertain a different rating agency or even insurance on any kind of bond issues in the future. So
there a couple of comments with respect to economic conditions, which These are anecdotal, but nevertheless, they're things that I do follow. Somewhat surprising to me, what I'm seeing from the real estate market. Now, this is not taking into account businesses closing and the like, but amazingly, over the last 3 months, the real estate market in DeKalb, by the national measures, is actually doing pretty well. There is some recovery in prices. We'll see if that feeds through. We'll see if that continues. The good news for taxpayers is if that's true, that won't feed through, just as the decline in the EAV, the decline in your assessed value didn't feed through to the tax bills for several years. An increase in the market value because we just went through a reassessment, plus the fact that it's based on a moving average. That's not going to feed through to people's tax bills right away. But there is some indication of some increased demand in the market, which would help if we got some new EAV, even in the downtown area, because the TIF's going to be going away in a relatively short period of time. The second thing is that on some of the fixed rate investment returns, they have actually been bumped up 1/4 to 0.5% over the last 6 months. They were low to start with, but they're above the minimums in a lot of the funds that I've looked at. So, but nothing that I see supports Moody's 4.3% return. So I think we're probably going to end up with our actuaries somewhere in between there. With respect to the return, but I think Moody's is probably overly conservative in their estimate of the investment returns over the next 18 years.
I think they got burned, with the, and no doubt about it. And people were relying on them, and I think they had a little egg on their face. We'll go into a little bit more detail again the next meeting, and you are right about the EAVs. They are a 3-year average. So of course, the assessors don't chase. They're not supposed to chase sales. They're supposed to do an overall average of a neighborhood. Is how they do assessments. And then on a commercial, it can sometimes also it can be on an income base. So versus just the property base. So not all the time is the assessment just the property value.
Any other questions for Mr. Wilkins with respect to the bond rating? Okay, I guess we go to city manager or to the interim finance director to talk about the major revenue status. I think would be a better term than recommendations at this particular point, but they've presented us with a lot of information with respect to the way that things have moved, and there are some good months, there are some less than good months, but I'll turn it over to staff to talk about the revenues.
Okay. Obviously being new, I'm not sure how long everyone's been on the committee, so I'll go through it fairly quickly. So, but if at the end of by all means, any questions, please ask. But on the front it's just a chart that shows breakout of major basically how the revenues typically are collected for this budget year in 17. As you can see, majority of it is sale and use tax. and then you've got property taxes, the next highest, and then intergovernmental revenues. Intergovernmental revenues can also include sales taxes, though. So, Brian left, but one thing we've found is that sometimes the sales tax, especially the 1 cent sales tax, is sometimes calculated as an intergovernmental revenue instead of a sales tax. So, different accountants or
you
auditors
mean the basic 1% that every municipality gets.
Yeah.
Well, it is. I mean, by definition, it is intergovernmental revenue because there is no local sales tax in Illinois as part of that 6 1/4. So it's a technical thing.
Mm-hmm.
I would view it as own source revenue, but from an accounting standpoint, it's intergovernmental revenue because it's the state doesn't actually have to pay it.
In some auditors do handle that differently as far as
I
categorization. So, on your next page, I'm not sure if we have the document, but you've been provided a lot of the slides. So it was in your in the email and the original packet. So, but as far as general fund revenues for 18 overall. At least the major revenues would be about a 3% increase. That's about $906,650 as far as an increase. So that's an increase from $31.8 million from $30.9 million. As you can see, some of them are trending slightly up. Some are slightly down, and then some are just kind of flattened out. And then there's a few that are kind of odd because the state has changed. So I'll go through in more detail when I get there. But overall, the total revenues that are projected overall for general fund are about 1.5% increase though, as a whole. The first one is property tax, and with that, as you know, we in Illinois, we usually collect about 98 to 99% of the property tax because of the tax sale and tax certificate sale process. Right now, the initial levy that's being shown here is $5.9 million. That is an increase of $371,000. That's all dedicated to police and fire pensions. There's no dedication to IMRF. It's strictly for the police and fire, and that's the initial. That's linked to the initial actuarial numbers that I received from the city's actuary. Any adjustments to that, up or down, would be depending on what assumptions that the committee would recommend. So again, right now, the police, as far as the required contribution, is about 49.5% of payroll, and that's about 2.68 million. That fund itself is about funded about 50%, and you saw some of that in the CAFR, but this is newer numbers from the actuary that are projecting. Fire, the levy would be $3,183,000. That's about 65% of payroll, and that fund is only about 41% funded. So that one's a little more challenging. So that's the property tax. Again, $371,000, almost $372,000 increase, completely linked to the pensions. The next major sales tax is the 1%. As we talked about, being intergovernmental. It's part of the 6.25% sales tax, and it's been fairly stable over time. You have some of the graphs there but in general it's ranged between 5.25 million and 5.4 million annually. This year, though, projecting a year end of about 5.3 million, and so have a modest 1% increase for next year above what the projected year end is. So have that $5,420,000 is a 1% increase over what the year-end projection of this year is. Home rule sales tax is 1.75% sales tax. It's in general, it's been between 6.5 million and 6.7 million collected over the last few years. As far as revenue collected the last 12 months, though, we've exceeded the fiscal year 17 budget by $66,000. And the last 4 months has trended about 4% greater than the same period last year, which is about $80,000. So a 2% basically growth rate is applied to the prior 12 months for the fiscal year end projection for this year. So what we're looking at is about 6.64 million projected for year end this year, and then a 1% growth on that for fiscal year 18. So again, not aggressive, but a 1% projection for on top of the year end of this year. All right. Local use tax, I guess I'm starting out with the ones that are a little more green or a little more trending a little better. We'll get to the ones that aren't a little bit later, but with local use, it's ranged between 785,000 and almost 1.1 million for calendar year 2016. And one of the issues with doing projections is since we went to a calendar year, all the other prior years were July to June, so kind of difficult. So I had to pull some other numbers to do the comparison. So that's why I'm using calendar year and I'm using the last 12 months and as well as the same period as last year. So I try to look at 3 different numbers, data sets to give you kind of a projection. So, but with this, with local use, that's actually based on IML, Illinois Municipal League. We're a member. They have economists there, full-time economists that do projections, and they had projected a per capita increase of about 3.5% for a fiscal year 2018. The prior year was actually at 6% per capita increase. So some of this local use, what they're saying is it's based on online sales and such, the Amazons and such. So that trend, and nationwide, online sales is trending higher. And as we have more of those types of facilities in Illinois, and this is distributed on a per capita basis, that's going to help rise the tide of all municipalities. So that's one of the reasons they are projecting a little higher. So given our last 12 months exceeded the budget by 55,000, and year-to-date actuals have exceeded the prior year by 4%. So at this point, I believe we'll exceed this year's budget by about 65,000 in this fiscal year, and then I have a projection of 1.144 million. That's about a 4% growth rate. So I didn't go with the full. Again, IML was at 6% and 3.5%, and their projections are on a municipal fiscal year, and municipal fiscal year is typically a May 1 to April 30, and then state fiscal, of course, is July 1 to June 30, and then now our fiscal year is the calendar year. So try to massage those depending on where they're going to be. So it's a little bit of an art there.
Excuse me, Jeff, what's the rate of that, the local use tax?
It's not a rate, it's a per capita.
But when they collect it, somebody's applying a rate somewhere.
They're collecting the state sales tax.
So is it the 6.25?
In general, sometimes they collect more, which is really kind of funky because we don't get it. So like if you look on your Amazon bill or something like that, they'll often collect anywhere from 6.25 to as high as 9 at some of these online retailers, but that's what is being paid to the state. It's a minimum of the 6.25%, and then the state takes that money and they do a redistribution of it on a per capita basis. So if a community has 0 sales tax, they still get a per capita share of the online sales.
It's true. Yeah, if you had no retailers at all, you would still get the per
You
capita.
would still get it.
That's
So
correct.
it's not the 1% portion that we generally
No.
get?
No.
You know, just from a comment standpoint, for what it's worth, as you think about that trend, and just assuming it's 6 1/4, working from that, and the inability to get home rule sales tax revenue off local retail, off of those similar prior sales that may have existed, rather than going through Amazon, that may be one of the explanations why our home rule sales tax is flat to declining. And if you look at that 10-year chart
no,
at the back,
it is, absolutely.
it's severely declining, and you're not recovering it, even though this might look like an increase. It's really a net loss in total.
Well,
if that trend would continue.
I have to disagree with you. If you add the 3 together, it is not showing necessarily.
No, I'm saying what it would be if this didn't exist.
Oh, if this didn't exist,
Yeah,
yes.
I'm just
No,
saying, from
I
a
agree.
concept of
I agree
internet
with you.
sales and the recovery of those relative to what you would have gotten locally,
Right.
it's a net loss.
No, I agree with that.
The next major income tax. You can see that one's in red. That one's not that one as far as well. Typically, we do collect the dollars from the state earlier in the year, about almost 2 to 3% in the first half of the year historically. Again, that's we do rely on the economists of IML to do some projections on that because it is a per capita.
And it's a guess,
Yeah, and they do guess. Yeah.
right?
But they they are economists, so they have 3 of them, and they look at general the whole state economy and such, and so again, as the state economy goes, then than ours. But
Actually, I would take issue with that, Jeff. The state makes a decision as to how much they're going to share. Even when the income tax was going up, they were not sharing what they necessarily should be. And what is very, 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 did I say enough varies? Yes. Very important to realize is that the income tax increase or the reinstatement of the income tax up to close to the 5% level, none of the money, and I think it's probably none of the money above the 3%, but it may be of the 3.75%. None of that money goes to the local government distributive fund. None of it. So that means that there will not be additional funds given to local governments by formula because of the increase in the income tax rate. All of that money is already spoken for, and none of it is going into the local government distributive fund.
that's correct. That's correct. And the other thing is that they lowered for the state fiscal year, lowered the contribution by 10%. Now IML had at least they felt as if the LGDF was going to go up on the municipal fiscal year by 4.5, but so all the numbers have been tweaked basically to accommodate that. So, but I will say that year-end projection, we're not going to make budget right now. We had budgeted 4.5 million, probably be about 4.28, almost 4.3 million. So. About 223,000 less than budget. So next year's projection is still going to be below what this year's budget was. So have it about 4.4. So accommodate some growth, but depending on the impact of that tax increase, on the state economy, that one, that one's right where. Well, it's a conservative number, but I can't imagine it would go up. So,
Just can we comment on these now, or do we want to just
Sure.
wait till the end?
No, go ahead.
There was a couple of questions on the overall revenue pieces, but this one certainly is one of them. Just analytically, as you point out, IML last year did their projection, and we used them, and we suffered the consequences of them, and then they reduced it once, and then that got closer, but at the end of the day, we're still coming out short, right? So given that comment about the 10% reduction, what's included in that LGDF in addition to or besides the income tax?
Just the income tax.
Okay, so the state's saying it's going down 10%?
They're saying they're basically making that political decision that they are changing the formula, so reducing the amount that's going into the fund by 10%. And then, so for the one fiscal year, so that would be July of 2017 to June of 2018. Depending on politically, whether that would reverse for the next state fiscal, that would be a political decision. But it is just the LGDF, and then
No, there's more in the LGDF
Yeah, I thought
than
there was
income
too.
tax. I think, let's see. I think that the personal property tax replacement is in there.
right, that's a smaller
It's
revenue.
a smaller amount.
Yeah,
I
smaller
think the
revenue.
photo tax is in there. It's a small one,
Yeah.
but there are, it would be incorrect to say that there's nothing in there besides the income tax. The income tax is the lion's share of it, but there is some other money which there hasn't been as much. It appears there hasn't been as much monkeying around with that. I mean, there still though is a question out there that we actually passed over. There's still a belief on many local governments' part, those that get sales tax, that the state is skimming on the 1%.
On the sales tax.
Yeah, because everybody has had lower, I do not know anybody that has met their sales tax projections, yet sales seem to be up overall. And so the plausible explanation is that they're skimming. You know, every community cannot be down when you look at the trends with respect to the state sales tax, which have not been down to the amount that the 1% sales tax has been down in terms of what's distributed. Now, I know that's a strong accusation, and I don't mean it as an accusation. It's just one of those things that's out there that every single municipality that I've talked to has come in underneath their 1% numbers, and that makes absolutely no sense given the increase in retail activity in a lot of these communities.
Could I just go back for a minute, Jeff? We were talking about the 10% reduction, and that would impute to at least 6 months of our upcoming budget year, right, through June 30 of 18.
Yes.
Okay, and just to further make sure I understand it at least, if we're basing it on the prior income tax rate of 3.75 without the increase, or was it 3?
Well,
What was it last year? Let me just ask that.
It was 375, but it doesn't matter.
Well, just for my example, it might be clarifying. So if I take 10% of 3.75, is that what we're losing?
No.
Is that what we're saying? Not this new rate?
No. The amount that the state puts into the local government distributive fund,
Right?
in theory, is determinate, but it's not. It's whatever the state decides they're going to share.
Okay. But
And so the 10% reduction is a 10% reduction in what the state has decided to share And it has nothing to do with the state tax revenues.
Okay. But given that somebody made an estimate of what this reduction was going to be, that could have a negative impact on us, the way I read this. Why
Yes.
why else are we talking about it?
I would take the 10% take 10% off of what we receive.
Yes, that's what I'm asking.
Yeah.
So that's 10% off the rate, which is 10% off of what we receive, which is $4.4 million, just in this income tax. So that's $400,000 in reduction that we don't have budgeted,
Yeah,
in your estimate.
Right. If
I'm
that's
just trying to
10%, it would be higher.
understand
It would be
what-
higher by about that amount.
Okay, so I guess at some point, we're going to offer some recommendations from the Finance Advisory Committee, and I'll wait to such time we do that.
It should be noted that you also, with respect to the local government distributive fund, you get into issues of what population they use. Back when it was growing, back when cities were growing, they'd have a special census to get the additional revenue, and it would pay for itself by the additional revenue that you got from that. In reverse, if you're losing population, they don't automatically subtract those people.
Well, to kind of add to what you were saying about the state will give what they want to give, I've seen where in special census, if one taxing unit's population goes up, they're going to take the population from another taxing unit, and usually that's then the county.
Right.
So the county's going to lose and that revenue. And because the state's not going to increase their overall population by that special census, they've got their number, and it's a finite amount because they've already determined what they're going to share. And so it's good. There's a zero-sum game on some of these numbers.
Yeah. Scary. Do you have anything more?
No.
Restaurant and bar tax, it's 2%. It's
Continues to grow.
It does continue to grow. Calendar year 16 was 1.9. The revenue for the last 12 months was 1.925, and then year to date is trended 3% higher than the same period last year. So I'm projecting a year end of about 1.96, and then next year 2% on top of that for a projection. So,
I think in general, and this may be anecdotal, but I think in general, one of the things that seems to be happening in the market is that when one restaurant closes, especially the chain restaurants, we seem to be replacing them in a reasonable time period. I mean, the Ruby Tuesday is getting replaced, the Kentucky Fried Chicken Long John Silver's is getting replaced. We had the new Popeyes open, which has done pretty well.
And Sonic opens Friday at 10 a.m.
What does?
We have Sonic going online on
right,
Friday.
Right. Yep. And some of these are brands that are hot with certain segments that are represented in our community. So they seem to be pretty good connections. Now, we've got a shopping center on West Lincoln Highway that is just about empty that used to be full of restaurant and bar tax. So we'll see if that also proceeds.
next one, Hotel Motel, on the other hand, is it's distributed. It's a 7% tax. 6% goes to general fund, and 1% goes to debt service. That was a decision for the police public safety building. So that's how that works. It's flattened. The last calendar year was only $250,000. The last 12 months was $256,000. So right now we are about $5,000 higher than the same period last year, but I think that right now we'll be at probably about $261 for the year end, and I just don't see any indication to raise it unless there's an announcement of some sort coming forward. But any kind of announcements take time to build and take time to occupy. So
I think we may see over the collections we get over the next few months, we may see some drops off of historics because the community lost a major source of outside visitors. They moved to another venue. They moved to Rockford, and we were doing real well on sales tax, especially restaurant and bar, and we were getting some hotel motel, but we don't have that anymore.
Likewise, the utility taxes, gas and electric, it's pretty much declined since 2014. Because that can be ebb and flow because of weather as well as utility pricing.
That's a structural change. I don't think you should expect that you're going to see any increase in utility taxes in the absence of a major increase in development. This is a structural kind of thing in the economy where people are finding alternatives that are not necessarily subject to the electric and gas tax, and in addition to that, people are conserving, and so, if from a financial standpoint, unless we had 1,000 homes that were built, something like that, I would not be comfortable. You can see that the decrease has been relatively slow, but it's been steady. And I don't see anything that would necessarily lead to a reversal of that trend based on the structural things that are going in the economy. I don't think it's weather. Right now, if it was weather, we should do well this summer because there's been a lot of air conditioning costs. But we'll see. The mild winter hurts it a little bit, but I just don't think that this is something that's weather related. I think it's a structural economic change in the way that people buy utilities, but I may be wrong.
Well, likewise, the telecom, just based on landlines, there are less and less landlines, so that's going to consistently go down. So that's why I have that
Right.
down from we had 819,000, took it down to 737 for next year. So then crime-free rental registration. That one's kind of leveled off a little bit, just activity-wise. But it's still a decent amount of income, so that's why it's in our list. But just have the budget being the same as this year with really no growth, but it does have the potential to grow. But I'm leaving it where it is right now. Video gaming, tremendous growth. I guess more people like to gamble and like.
Well,
to
we
game,
changed the structure.
So right now, just again structural. The tremendous change. It was 2016 was 170,000 collected. Last 12 months was 189,000, and this year versus last year a 30% growth. So this is just taking the year-end projection and adding 18%, but not a 30%. I'm not sure if we could continue that type of growth rate. So back that down a bit. And then next one, ambulance user fees, another growing revenue. Again, it's been growing since 2014. 2016 calendar year, about $1,030,000. Last 12 months, though, it was 1.1 million. And then there's been a 20% growth period in the last versus the same period last year. So I believe we'll be at, my projection, at least for fiscal year 17, is 1.1 million, where we had a budget of $1,060,000. and then have about a 15% growth rate on the year-end projection for next year.
Just a question on that. From your perspective, what is driving that? Are those rate changes, or
Yeah,
is this an agreement?
We changed the rate.
Yeah.
How much of a rate increase was that? All of that?
I forget what the rate increase was, but,
It was going to account for a
yeah.
It's all of it?
substantial, yeah.
I think
Okay.
there's two things. Number one, the rate change, but number two, we also, the fire chief had recommended hiring a part-time employee who is managing that program.
Collecting
So,
it?
Yeah, you're seeing the impact of having the part-time, and his analysis was the increased revenues are going to be paid for that employee's costs, and that is true. We're making much more revenue than the cost of that position.
Agreed.
The next one, fire services, most of that is agreements with the NIU and the fire district. In fact, the increase that I have, $827,000 of the dollars is for those contracts. So we'll exceed budget this year, I believe, by anywhere between 12 and 40,000. But most of this growth is linked directly to those intergovernmental agreements. So.
I think we need to probably digest this in some kind of a holistic form, because I don't think any one of these pages tells us a definitive route that we need to go with respect to revenue generation. And when I say a definitive route, I'm not making any judgment about increases, decreases, tax base, any of that. I'm just talking about in general. We need to study that. Go ahead. Oh, sure.
I want to thank you, Mr. Wilkins. I thought this page was extremely helpful to be just a quick summary of what was going on from the different streams of revenue. And then it made it also very easy to tie back to the explanations. And when you flipped through the report and read the explanations, it was like, yeah, there you go. So thank you.
Oh, you're welcome. Well, that was the city manager's suggestion to put that in there, so I give her credit where credit's due to.
Did you have any other guidance that you needed at this point?
No,
Okay.
other than if there's any questions, just as we talked earlier, for next month's meeting, we'll have the actuaries here to be able to address recommendations on funding levels. As Jeff indicated, he's used the amounts that they've given for what's included in the revenue projections. And as I indicated to Chair Petal before the meeting, we've been working diligently in putting together the 5-year financial plan. We have taken the advice of the FAC, and actually we're utilizing, well, probably about at least a half a dozen staff people that are working on this plan right now, but we're utilizing our management interns, have been very focused on data collection and analysis.
Just a comment, if I could, talking about other items for upcoming agendas. I was going to ask, but didn't want to belabor it, regarding our effort on the accounting for the water capital plan and how that's progressing. And I was looking through the CAFR, looking for new fund balances and capital funds. I don't think I saw that, so the concern is, how is that being accounted for? Is the capital split off? Have we did that as of year end, as we were indicating we were going to per policy? And then how are we tracking our water revenue increase that we all agreed to 2 years ago, with a good portion of that water rate increase specifically identified for the capital fund? So just as a future agenda item, it'd be good to have a solid review of that.
I think we need that report to go forward with the next fiscal year's
Yeah.
budget, so I think that's a good catch.
Second comment, would be regarding the 5-year strategic financial plan, that certainly looking forward to the comparatives of other communities, their staffing, the rationalization, the ability of the data to enable us to get to rationalizing our costs. Because as we've talked for 2 years now, this capital need and how the tax base and any projected rate increases in taxes that might be considered in the future, the concern there was, can we rationalize what we have, and is there other opportunities besides looking forward to that potential rate increase in the future? So looking forward to that strategic data.
Anyone else? Okay. At this point, I'll ask, public if they wanted to participate again at the end of the meeting.
Just to follow up, Mr. Wilkins, on the property tax estimate increase for the next year, you indicated $372,000, though you didn't specify how that increase, how you came up with those figures. Are you basing it on EAV increase or projected recommendation to the council that we increase the tax rate upon the taxpayers?
Do you want me to address questions or?
Well, how'd you come up with the 372,000 figure is what I want to know.
They actually, that came directly from the actuary, and they'll go into more detail next month, but
the origin of that, though, I'm trying to figure out.
No, that's that. What Mr. Wilkins is saying is that it is the figure in order to do the exact same thing that we've done this current tax year with respect to covering the pensions. That's the amount from the actuary that would be necessary to do that in the next year. That's it. And it still has to be discussed.
Right, right. It sounds like a tax increase, so I just want to point that
out.
Well,
we don't in any way, shape, or form have any way of knowing that at this particular point. As you know, EAVs went up around 10% last year. Tax bills went up around 1% overall with all the taxing units. We don't know what's happening with EAV. We don't know what's happening with alternative revenue sources. And the city council is not present tonight, and they're the ones that will have to vote on the levy with an appropriate public hearing. So all that Mr. Wilkins has done is said, all right, if we continued on with funding this amount of the pensions from the property tax, this is the number we've gotten currently from the actuaries is the best estimate of what that would be. So it's more an estimate of, it's not an assumption of revenues, it's really an assumption of what would this chart look like if we continued with current policies with respect to the funding of the pensions.
And I would just add, this is in keeping with the financial policies that the Finance Advisory Committee has passed and the council in regards to how to fund pensions.
Right.
And you mentioned a rate of return for the pension funding, 7.5% is what we're averaging. Is that, did we actually calculate that as far as the actual rate of return? Because I know my personal 401k this year, if you've looked at your portfolios, it's been great this past year. So
that number came from the previous actuary, and then it was dropped down by the current actuary. So that's an actuarial based assumption for the market.
Right.
So and that's long term. So you're going to have years.
Yeah, you're going to have your ups and downs, but I mean, if you looked at your portfolios over the past few months, they've been awesome. So
and that's not a decision really that has been a locally generated rate. It's been generated by the people who are paid to do that.
Okay, very
not
good.
Staff.
Right.
Do you have anything more? Yeah. Would you? Okay. All right. Good. All right. I'll entertain a motion to adjourn then.
Do you want to confirm the meeting?
I'm sorry?
Do we want to confirm the meeting?
Oh, yes, we need to confirm the next meeting. The next meeting is scheduled for Thursday, September 21st at 5 p.m. That was done through a series of checking people's schedules, so.
Is there any chance to move that or not? Or was it a long, drawn-out?
It took a
Pretty difficult.
few iterations, yeah.
Okay.
I mean, if we move it, we're probably moving it back, but we always start with Chair Petal's schedule, and we want to make sure, the other issue we have is the other meetings that are either held in this room or, so if you want us to move it, we just end up moving it back, probably not forward.
Yeah, that, we had a couple other dates that were scheduled, but there was conflict with the meeting room.
We have a special committee of the whole meeting by the council that week as well, so we're balancing multiple meetings. But if you want us to move it, I just warn you, we'll end up moving it back.
That's fine. If I'm the only one, that I may not be able to make it.
Okay. All right, let's then entertain a motion to adjourn.
Second.
Non-debatable, all in favor, say aye.
Aye.
Opposed?